Let's talk about 5 solutions. I think that's what we want to present for protecting the EPF. And perhaps my last 2 solutions will become the most controversial. And I've ordered them such that, you know, the first few solutions seem perhaps more acceptable to everybody. But I think we will have more debate on the last 2, and we should then subject them to discussion as well. Okay. I think the first important sort of approach might be to have higher standards for information disclosure. And these don't need to be standards that are reinvented. Already, whenever a private company lists in the stock market, the Colombo Stock Exchange, there are certain requirements for information disclosure. Now, banks have a higher level of disclosure requirements for information disclosure to the public. So I think minimally, it makes a lot of sense to expect that the EPF has the same level of information disclosure as listed companies, as banks. And later, of course, you could ask whether they should have a higher level of disclosure, but minimally, the level of disclosure already required of publicly listed companies and banks, I think, can be a very good starting point in protecting the EPF. So I think that higher standards for information disclosure, and how we can discuss this in discussion time also, is a very good way to begin perhaps protecting the EPF. Secondly, I think Nihal alluded to the work that's being done to entrench better oversight, and we have sort of 3 perhaps thoughts on entrenching better oversight. One is for the Bank Supervision Department of Central Bank to supervise the EPF. You know, I think the central bank does have an excellent bank supervision department. Many of you who are on boards of finance companies have had to work with them and recognize that they have a very high degree of competence and rigor in the way they supervise independent financial institutions when they do their audits. So at least the same level of scrutiny. Now, many of the things that Nihal, you mentioned, that were cameras and other things that were introduced, were standard requirements for private, financial companies that were imposed or requested by the Bank Supervision Department. So having the same standards that the Bank Supervision Department of the Central Bank places on the EPF, as it does on private companies, would be a very good way to start. And of course, what we realized, Nihal, when you said, that not every loss is a fraud, is that it's very difficult, even if the information were provided, which it is not, for there to be a public level understanding of whether there was fraud or just loss. And this is why the forensic audits which we presented today are so important, because it separates out the question of fraud and loss and presents information that relates to what are fraud or improper transactions. It certainly does not consider transactions that made a loss through following proper procedure and market transactions to be problematic. So I think repeating forensic audits at least every 3 years would be a very good way, I think, in improving the protection. It's the first time that a forensic audit like this happened, and it has helped to make enormous improvements in governance and brought about enormous improvements in the discipline of the EPF. Traders as well, because they realize now that the forensic audits could be done again. But if they're forgotten and they are never repeated, I think the practices could backslide into what they have been in the past. So entrenching the forensic audits on a regular interval would be quite important. I would say a third way to entrench better oversight is to ask the EPF to have public hearings, to present their numbers, to present the annual reports. I think it is unacceptable for the EPF to simply say, oh, it's the fault of the Minister of Labour that its annual reports are not out. So many government ministries and departments successfully bring out the annual reports, and the single biggest fund in the country with 2 trillion rupees roundabouts, where the private sector workers have their retirement incomes, is somehow managing not to have annual reports now for over 4 years. not to have its annual report published. I think that's a scandal. And having public meetings and entrenching public meetings in which the EPF has to actually be accountable to the public and explain to the public those things that have come out may be a very important way. I was on the Public Utilities Commission for a while, and we were required to have regular public meetings, and we had about 1 or 2 a year at least. And I think having the same standard for the EPF governance would, I think, be a way to entrench better oversight. Thirdly, I think the forensic audits was such an important event that there should be a requirement for disclosure on the corrective actions taken. So it is unclear currently.
The landslide degree for the new
I think somebody has their mic unmuted, and if someone can check and correct that, thank you so much. Yeah. So I think it is unclear what precise actions have been, corrective actions have been taken on the disclosures that came on the forensic audit. Now, we only scratched to the surface of the disclosures of the forensic audits, and we gave you the summarized total numbers. Of course, when Anushan said, says 9 billion was lost, or 24 billion was lost, every single transaction connected to those losses is disclosed in the forensic audit. And it's an enormously rich resource. Transactions where traders have bought stocks and sold their own stocks to the EPF, sort of extremely scandalous activity, where others were maybe central bank staff, after having been told about the forensic audits, deleted files from their computers. So there's a large amount of scandal that's been disclosed by the forensic audits, and they do require corrective action, because otherwise it creates a culture of impunity. The idea that these things can be done, they can be happened, and even after a forensic audit, that they can be swept under the carpet. So I think it is quite imperative that the central bank publishes answers for actions taken and not taken against individuals exposed by the audits. Answer for the recommendations that have been implemented. And now what Nihal describes are things that were done even before the forensic audits were put in place or came out, because the forensic audits came out only towards the end of 2019. But really the forensic audits do suggest, have other recommendations that then should be something that should be disclosed as to what the central bank's actions are. And I think the only way to perhaps get proper accountability on disclosure would be for Parliament to call the EPF to explain itself on a regular basis. So the Committee on Public Enterprise, COPE, calls many government institutions to account. And I think it would be quite appropriate for COPE to call EPF to come and explain the actions taken on the forensic audits and how such practices are prevented. But Parliament could set up its own investigative committee, like it did on the Easter attacks, to say the EPF and the central bank must explain what happened and how those same actions are being prevented. So I think this requirement for disclosure and corrective action may be an important way of preventing a culture of impunity setting in, where these things can then happen again. The fourth, I think, and this, people will have different views on this one, would be to halt secondary market bond transactions by the EPF. I think Nihal has explained why that is possible, why there's no longer a reason for the EPF to go to the secondary market and buy bonds from private third parties instead of buying from the government. One, because now the schedule of auctions is published and EPF knows if you can't access the auction today, it can access tomorrow. But also very important that the central bank has a way of offering the EPF excess funds or funds not sold to the private bidders at the weighted average price of the auction. So if the central bank has a system that it can offer funds at the weighted average price of the auction to the EPF and give them right of first refusal, then the EPF doesn't have a huge issue. It doesn't even have to worry too much about its bids in the primary market. It is very similar to how you sell, nuclear power in regulated auction markets on energy, because when one particular supplier or actor has a very large market power like the EPF, then the market discovery or price discovery happens with the other actors, and that actor can be offered whatever quantity it wants at the same price. So there are ways to actually solve this problem by keeping the EPF only in the primary market and having a price discovery mechanism in the auctions and in the offers that are made. And I think what Mr. Nihal Fonseca said was that that some of those steps were already taken. And I think that does mean that halting secondary market bond transactions for the EPF would prevent much of what we don't see as the bond scandal. I think the bond scandal perhaps was, in a way, the tip of the iceberg, because that showed what happened when the primary market, decisions were changed to allow private actors to, buy a large part of government bonds at a higher price. What was seen in the COPE or the parliamentary report in 2016 was that perhaps secondary market actions that disadvantaged the EPF was also a very significant scandal, and an unseen scandal because, of course, the EPF doesn't release the data. So that's precisely the data that Verite Research filed an RTI and requested to give us data on secondary market transactions, which should be minimal anyway. And to show us what those transactions were and create traceability on those transactions so they could be analyzed to see whether they were appropriate or inappropriate transactions. So that is still pending. The central bank has not released that data. But I think what it does show is that there is something to conceal, and halting secondary market bond transactions would be a way of protecting the EPF from that kind of abuse in the secondary bond market. I think the last one, I think slightly differently from what Nihal said, I would argue that it is also appropriate to halt share market purchases by the EPF. The central bank, when they made a decision to after having halted it for a period of time till it improved its governance, as Nihal said, when they decided to go back into the share market with the EPF, cited two reasons. They said, well, one reason is that the primary market or the government debt market is not going to have enough supply based on the projected EPF demand, and therefore, if the EPF had to invest the money that was coming into the EPF, it had no choice but to go into the share market. That was the main argument. The second argument was on the idea that you could get higher returns in the share market. So these slides are from Insight that has been put out by Verite Research. We can share the PDF of that on the chat box that you can go and read. It's a short insight. It's 3 or 4 pages. It's analysis we did that shows that the central bank clearly made a mistake in assuming that the government debt would run out in terms of supply for the EPF. And that's something we have also sent to the central bank, and there has never been a contradiction of the analysis. And if there is a contradiction, I think it's important that the central bank publish an alternative analysis that shows why they would believe that government debt, the supply would run out, and that EPF would not be able to meet all its needs by simply lending to government on the primary bond market. Secondly, I think even more problematic is that we can't find any reasonably long period, and EPF, as we know, is not in the share market as a trader to buy and sell and try to make a quick buck. It is there to invest and hold to maturity or long term. It's an investment portfolio, not a trading portfolio, and that's what the central bank also has revealed at the RTI process, that the investments that they make are primarily and almost well above 95% an investment portfolio, and it doesn't expect to be a trading portfolio. So that you can actually analyze historical returns, and what we show in this research is that actually there's no period in which the stock market has outperformed the government debt market. So the EPF got 11.1% return on every, at minimum on 25-year periods that it invested, whereas the stock market got much lower return. Now we reanalyze this for shorter periods, so I won't bore you with the details. You can go and see. even if you look at 5-year periods, there's a very small, there's only about one period in which, one or two, in which the stock market returns in that short period outstrips the returns of the EPF. And even then, if you risk adjust that, then it is a much lower return. So you have to look at the stock market is, of course, a much higher risk. And there's a way to look at what the risk-adjusted return is. Risk-adjusted returns on the stock market are hugely underperform what the EPF gets in government markets. So any pension fund manager knows that their primary goal is to have a higher risk-adjusted return. And you don't simply count returns without risk adjusting them. And there's no analysis that the central bank has put out or anyone has put out to demonstrate that the stock market is capable of providing the EPF with a higher risk adjusted return. So I think it does not make economic sense for the EPF to be investing in the share market until that analysis can be made available to public scrutiny and debated and decided. So I think this decision to go into the stock market should not be a decision of a few people. The workers have their money in the EPF. They know what they're likely to get with investing in government bonds. And I think it may need to be a transparent decision in which workers and trade unions are consulted and given a choice as to how they would like the EPF investing and whether they would like to take a much riskier investment in the stock market. And then they need to be allowed the opportunity to scrutinize the analysis of the central bank as to why it thinks that risk-adjusted return in the stock market is greater than investment in government bonds. And I think it has to be a consultative, informed, analytically sound decision if the EPF is to go into the stock market. Until then, the risks of the pump and dump type of arrangements that we saw exposed by the forensic audit are possible again. And as Anushan said, even in this current scenario, we will see again the problems of 2010-11, that while the market performs extremely well, that the EPF performance in the stock market can be relatively quite poor. And that is why protecting the EPF, I think, it would be wise until the analysis can be presented and justified and agreed to by workers to halt share market purchases of the EPF as well. So that brings us to the end of our 5 solutions, and we will open it up.